We're interviewing Tom McManus, whose accountancy firm Treetops has over 2,000 clients. Tom, you advise entrepreneurs and business people on a wide range of issues. How should entrepreneurs plan and prepare for starting their own business?
Well, there are two main ways really that an entrepreneur can start. You can either start as being self-employed, or you can start trading via a limited company. There is a third way, which is to trade as a partnership. This is really just where two self-employed people get together and move off in business together. Each different method, or the two different methods of trading, really have different merits. Some are good, some are bad. Generally speaking, it depends on the level of profitability that you expect your future business to have, and who's involved in the business, and the products and services that you're providing. What you have to do really is to sit down with someone like myself at the very beginning, explain to them exactly what you're doing, and they can point you in the right direction. For example, if you take a case study, if you were starting off, for example, as an estate agent, you would expect to create a loss in your opening period. You're going to spend a lot of money advertising, going around, meeting new clients, opening premises, fitting out premises, and you're going to spend there's going to be a lot of costs involved in this before you actually bring in any sales of actually selling that house sometime down the road. If you create a loss like this in the opening period, then it's probably best for you to start off being self-employed, because you can then take that loss and you can offset it against any other income that you have in the current tax year, or indeed in the 3 previous tax years before that. So if you'd worked for an estate agent previously as one of their senior managers, earning a salary of, I don't know, 60, 70,000, you'll be paying 40% tax. This means all of your costs that you incur in the opening period can be offset against those costs, notwithstanding that they were 3 years ago, and you can generate yourself a tax refund. So in a small business where you think there will be a loss at the start, it's usually good to start off maybe as self-employed or a partnership. As your business progresses and you start to get to the point where sales tend to come in, and you're making a profit, then it's usually better to switch over to becoming a limited company, because at that point there, taxation as it stands at the moment will be less. So purely from a tax point of view, that's really your initial tax plan. Obviously it's a lot more complicated than that. This is a sort of a summary in 10 seconds really.
When starting your own business then, what are the key financial decisions that entrepreneurs need to make?
When you first start off, you start off with a kernel of an idea really. The whole point of running a business really is to make some money. That's what we're all in it for, whether you're a window cleaner, whether you're a chartered accountant, a merchant bank. No matter what you do, the whole point of going to work each day is so that you can generate some cash to provide for your lifestyle. So the main thing that you have to look forward to is, how am I going to generate this cash? The way you generate the cash is through sales. Whether you're selling accountancy services like myself, whether you're a window cleaner doing that, an estate agent collecting commissions in from the sale of houses. You have to sit there and you have to plan what your future sales are going to be over the next 12 months. That's very difficult. You have to guess where your clients are coming from, what you're going to charge them, and what the level of sales are going to be, and the different mix on each different sales line. Planning what your costs are is much easier. You will know what your rent is because you know what the landlord's going to charge you. You know what the rates are because the local authority will charge you that. You can have a good guess at the telephone bill. Planning out what your costs are going to be is quite easy. Planning the sales is much harder. And then eventually you have a sales plan, you have a cost plan. What you have left at the end of the day is the profit. If you do this plan at the early stages, it will give you an idea of how your business is going to look. You need to know this, because if your business looks like it's just going to create a loss, do you really want to do it? Because you have to be in it to generate the cash, the profit. Otherwise, what was the point in starting in the first place? And lots of people really, really forget this. They have their idea, they have a great idea, they're going to start their business, and you can invest an initial investment of 50,000, 100,000, $250,000 with your idea, and I have seen people spend that amount of cash and a lot more, and at the end of the day, they end up with nothing. You have to be very careful about your initial plan.
Looking forward then, is there any important training that a new business owner should undergo when they're thinking about setting up a business?
Well, I think the normal sort of person really doesn't get any training. You know, I've been through school, I've been through university. No one taught me how to run a business really. So I did go to accountancy school, and that's where they teach me. Most people don't go to accountancy school. Starting your own business, you have an idea. You might be very good at sales. You can bring in lots of sales. The income will come in. you forget about the second part of it, the part where you've raised that sales invoice, you've sent it out to the client, you've delivered the product, someone has to collect the cash in. Don't forget, to every part of a business there is an administration side. If you or someone who's helping you doesn't collect the cash in, pretty much soon you're going to run out of cash. Not only do you have to collect the cash in, you also have to pay your suppliers. So if you've ordered some stationery, you've got to pay the stationery company. If you don't, you won't have any more stationery. Or if you don't pay the landlord, the bailiff will turn up. All of these things need to be dealt with. This is the administration side of it. The key really, as we said earlier on, is to look at the sales. Without any sales, you haven't got anything really. You haven't got a business. When you start, you have to concentrate on the sales. The sales will come in, but you mustn't forget there is an admin side. The admin side of it is dealing with all the payments. Not only that, once you reach a certain size, you must register for VAT. And VAT reporting is generally done every quarter. It's very important that you address this issue, because if you don't deal with your VAT returns in a timely manner, the Customs and Excise will not be happy with the way your business is being run, and there are very severe financial penalties for not dealing with the VAT. If you really don't take to any sort of administration yourself, you can talk to your accountant and set out a comprehensive package of how he can help you. It can be everything from raising the invoices, helping collect in the debts from your customers, right down to writing out the checks. Obviously, I don't think you particularly want your accountant to sign the checks, but he could present them to you so that all you've left to do is to sign off the checks and pop them in the post. Really, your accountant there is to help you. And you can design a system between the two of you to run whole of your admin all the way down the line. And really, the accountant is there, so he's like a shop window, or he's like a supermarket. All his products are on his shelves. It's your responsibility as the entrepreneur of your new business to walk into the accountant's supermarket and say, I want to buy that help. You will find often that accountants aren't proactive, they're reactive. That's because they're very busy people and they're running lots and lots of sets of accounts for other people. They can't think about all of their clients all of the time. And lots of clients will criticise accountants for not being proactive. They say, oh, they're only reactive. They only react when I approach them. From my side of the fence, if I wrote to every single one of my clients and said, can I do all this work for you extra? 999 out of 1,000 are going to say no. And why are you bothering me? And so it creates a lot of work from our side of the fence, and to ask people to do something that they don't want anyway. So you have to seize the bull by the horns, go in to see the accountant, sit down with him and tell him exactly what you want. If you tell him exactly what you want, he'll do it.